Joining me now, Meltem Demirors, Chief Strategy Officer of CoinShares. Meltem, great to see you. Thank you so much for joining us.
Yeah, great to be here, Kate.
So what's going on with Bitcoin? It's outperforming equities after months of tight correlation. Break this down for us. What's going on?
Yeah, absolutely. So, look, one of the things we always talk about with Bitcoin is Bitcoin as an antidote to chaos that you can buy in your portfolio. That's a narrative I've been talking about for a number of years. I think this is really the first time that we've seen Bitcoin, number one, in an inflationary environment, right? And that's a narrative that's been going on since early 2020 when Jay Powell turned on the money printer, right, at the start of the global pandemic. Second, I think we're seeing an unprecedented level of geopolitical conflict, right, particularly with the Ukraine Russia conflict. And I think the other factor we can't ignore is I think the Canadian trucker protests and the OSC freezing the accounts of people involved in that protest, including coffee shops who were serving coffee to people, has really just highlighted to people in the Western world how important money like Bitcoin is in a world that's becoming increasingly surveillance oriented and in a world where banks, in particular central banks, are pushing for more digital money that they can turn on and turn off at the switch of a button. So I think there are a number of different factors together that are leading to increased amount of investor interest. We've also seen more activity on a number of trade pairs, including the ruble Bitcoin trade pair, as well as a lot of trading activity coming out of Ukraine as we see difficulty with capital flight, in particular in those countries.
Got it. And as far as those currency pairs and some of the demand out of Russia and Ukraine, it seems like those are more thinly traded. They're probably not absorbing most of the demand for Bitcoin, but it does seem to be adding to the narrative. Can you sort of describe that dynamic of how demand out of Russia and Ukraine might be helping Bitcoin, even if it's not all of the buyers there?
Yeah, absolutely. So the volume is quite small. I think yesterday, which was Monday, the volume was around 1.8 billion. For context, crypto markets trade anywhere between 20, 30 billion a day in both spot and options. And so it's not a huge amount of volume. What's also really interesting is the bid didn't start moving, right? So Bitcoin didn't start moving until US trading hours opened. So when the US market opened, we saw a lot of bids on the USD trade pair side. And so I think what we're seeing is this narrative is really catalyzing investors who maybe have been sitting on the sidelines, have been in sort of a risk off environment, have been contemplating whether or not it's a good entry point. We saw Bitcoin dip as low as 33,000 earlier this month, and now we're back up to 43, 44 range. So I think we've seen a lot of people sitting on the sidelines with dry powder, looking at this macro landscape unfolding. Again, one of the things I always just like to caution people about is when we're making inferences in a very short time period, right? It's very difficult to tell if this is a trend or just a localized event. So one of the things we really look at CoinShares is longer time series of data. And again, I think this narrative around the link between Bitcoin and tech equities, Bitcoin and inflation, Bitcoin and geopolitical turmoil is just going to take some time for us to really understand what that relationship looks like. If it's causal, if it's inversely correlated, there's just simply not enough data at this point. But early trends seem to indicate that all of these factors together are going to lead to a rally in digital currencies.
And how long do you need for that case to be proven out? I know it's been the long-term bull case, and crypto bulls have been hoping for this moment where Bitcoin can really prove itself. How long of a stretch of data would you need to say that Bitcoin is there?
Yeah, I think 18 to 24 months at a minimum. So we've been in the global pandemic for about 24 months now. And I think we've certainly seen an increased interest in Bitcoin. We track weekly fund flows. We saw last year was the biggest year for inflows into crypto products, in particular Bitcoin exchange traded products. So we continue to see demand from a very specific type of investors, which is institutional investors and retail investors accessing Bitcoin through structured product, which is the most sort of common format for investors who aren't native to the crypto world. But we're also seeing an uptick of activity in cash settled Bitcoin futures volumes, which are traded on the CME. And again, another popular route, as well as an uptick in volumes on the crypto native trading side. And in fact, Monday of this week was the fifth busiest trading day for Bitcoin in its entire history. But again, I think 18 to 24 months. So we'll see how things evolve over time. But I think so far, the narrative around Bitcoin certainly continues to shift as these events in our world are really starting to catalyze movement and also sentiment.
Got it. And CoinShares has got a lot of great data to show that. So we always appreciate you sharing that side of it. I do want to ask you about crypto derivatives too. There's been talk of a possible short squeeze this week, and that may be adding to some of the price movement. What have you seen as far as the risk traders are taking in derivatives markets and some of the more complicated leverage trades out there? How is that affecting prices?
Yeah, absolutely. I think it's also important to remember, right, that funds typically mark their book on a monthly basis and a quarterly basis. So we just came up on the end of February, right? So today is the first trading day of this new month. So I think we're seeing a lot of people initiating new positions. We also have seen a lot of options contracts reaching expiry. So in those instances, people will either roll the contract forward or settle it. Funding rates are also shifting rapidly. One of the important things to remember is most Bitcoin derivatives that are traded have a very unique structure called the perpetual swap, which has a constant funding rate. So instead of the option settling at a set expiry date, it rolls in 8-hour windows where either side of the trade will have to fund to keep the position at NAV, right, as the Bitcoin price fluctuates. And so funding rates are really important because they can be as high as 1 or 2%. And if you're paying to borrow cash and you're paying to keep your position open, it can get very expensive very quickly. So we keep a really keen eye on funding rates as well as position sizing going into expiry, as well as the net size on the long side and the short side. Over the last few weeks, we've seen people being net short. We saw a lot of bearish positions on the option side. That's now starting to flip. We're starting to see more positions on the long side. And again, I think for traditional traders, looking at the crypto order book is challenging just because the structure of the perpetual swap doesn't really map cleanly to an existing American or European options contract.
That's so interesting. Some of the structure there, perpetual futures, it's just an entirely new instrument,
Absolutely.
and one of the many unique structural differences in crypto and that side of the market. Well, Meltem, thank you so much for walking us through this. Great to see you.